Alright, hello and welcome to Camel Finance. I'm your boy Camel and welcome to the week. Welcome to Monday. I got kind of a mixed bag today. Okay, so we're going to talk a little bit about this weird recession indicator that I found. I'm going to show you that. I'm also going to show you some Bitcoin stuff. I'm going to be dispelling some FUD, although apparently the mainstream media have already beaten me to this. And then I'm going to show you some quite bullish charts as always. A little bit of TA at the end for what I'm looking for going into today's session. Needless to say, not a great deal has changed since the weekend's deep dive TA, but I do want to point out one or two charts and just reiterate a couple of points. First of all, I was answering a few comments this morning and I noticed a theme of people saying things to me like, at the moment, everyone is bullish, and because everyone is bullish, then that must mean the correct posture is to be bearish. So I just thought I would make sure we clear this up very quickly, okay? A quick reminder about the herd. First of all, I can spell herd now. So thanks for everyone that pointed that out. But in all seriousness, right, it is at major inflection points that being a contrarian is the correct posture. We want to be contrarian at the inflection points. That means at the lows and at the tops. After we've come off a severe downtrend, okay, at the lows, everyone and his dog is bearish, doom posting, thinking we go way, way, way lower. When the crowd is heavily one-sided at these major inflection points, it is down here that being a contrarian makes sense. Then, after we've had this big move, this is the important detail here. The crowd, the herd, can be correct for a while in the middle of this move. They can be correct here, and I'll show you why in just a second. And again, at major inflection points and tops, this is where being a contrarian is the key. This is where it's important. This is where the herd will be very, very, very one-sided, saying this thing's going to go on forever. We've reached a new paradigm. We can never have another recession. Or in the case of Bitcoin, there will never be another dip more than 10 or 15 or 20%. BlackRock is here. There's going to be no more cycles, no more bear markets. Okay, when we start to see this kind of narrative proliferate, that is where, again, at the major inflection points, being a contrarian is important. That is where we can expect to see the herd get wrecked. But like I said, in the meat of the move, okay, the crowd can be right for a while. Allow me to show you. What I have in front of us is the S&P 500 chart over the last, 16 months, give or take a couple, okay? As you can see, up and to the right, pretty much in a straight line. Yeah, there's always dips along the way, there's always pullbacks, there's always consolidations. But the reason I bring this chart up, okay, is because, again, at the inflection points, it's difficult to make this call. It's difficult to be on the opposite side of the herd, and it is important to be on the opposite side of the herd, okay? But when we zoom out and take a look at this chart, it does not take a genius, okay, anywhere in here to say, okay, maybe it's time to be bullish, okay? It does not take a genius to look at this, all of this move off the lows and say, you know what, once we're in this neighborhood, time to get bullish, okay? Now, that does not mean we're at a major top. It does not mean this is an inflection point. It just goes back to what I was saying earlier, that the herd can be right for a while in the meat of the move. And again, it's simply because it does not take a genius to look at the prior all-time high, see the market smash through it, and then say to yourself, okay, time to get bullish, right? It's pretty flippin' obvious that this is a time to be bullish. Now, again, at some point in the not too distant future, perhaps we will probably be at one of these major inflection points. But don't think just because you look around and everyone is bullish on Bitcoin and everyone is bullish on the stock market that you should be entering short positions right now. Okay, at the very least, wait for some trend line breakdowns, okay? So you've at least got an area on the chart around which you can manage your risk. So if you're worried, if you're nervous, I'm just simply saying don't be. We are nowhere near that level of one-sidedness yet, okay? But as this uptrend evolves and continues to evolve, and as Bitcoin continues to move higher, do expect the herd to become more and more one-sided, and you should be on guard for that. The next thing I want to jump to is the Sahm rule. Now, if you're unfamiliar with this, the Sahm rule identifies signals related to the start of a recession when 3-month moving average of the national unemployment rate, termed U3, rises by 0.50 percentage points or more relative to its low during the previous 12 months. Now, if we hop into here and take a look at the U3 unemployment rate, okay, the U3 unemployment rate is what the Fed tracks, and it has been trending higher since late 2022. It's rising 50 basis points, goes back in line with this, from 3.4 to 3.9% for this month's readout for March. So right now, in the context of seemingly strong non-farm payroll numbers, the leak higher in the unemployment rate has been ignored. So again, I continue to cover this as a repeating narrative that we can't really trust the data anymore. We have shifted into this new paradigm where they come out and say the labour market's strong, and then a couple of weeks later they revise the data again and it reveals actually the labour market is not as strong as people thought it was. We've also had them continuously change the CPI calculations. When we're up at the top and they're reporting something about 9%, they change the calculation to stop it showing that it's 20%, and now down at the bottom they just so happen to change it right around the time that inflation suddenly became sticky again. I think it's pretty common knowledge at this point the CPI data has always been a basket of manipulated numbers, but we are starting to see this right in plain sight. I also played that clip from about 18 months ago where it showed them standing up at the front and simply lying about the definition of a recession that goes back over 100 years and is written in every textbook and every university definition since they've been teaching economics.
White House officials come up here to say, no, that's not what a recession is. It's something else. How is that not redefining recession?
Because that's not the definition. That is not the definition.
Right.
And now here we are with, again, revised numbers, again, seeing a labour market that is weakening, even in the face of the Fed standing there and lying to our faces and telling us that actually the labour market is strong. Again, according to the Sahm rule, 50 basis point increase or more relative to its past 12 months, and we can identify this as a recession trigger. And what have we got at the hard right edge? 0.5 percentage point of increase for the month of March. Now, allow me to make this easier to visualize. We've got the real-time Sahm rule recession indicator. You can see that when we get spikes in this, it typically corresponds with recessions that we see highlighted by the grey shaded boxes. And if I zoom in at the right-hand side of this chart, you can see this thing is creeping up and creeping up and creeping up. So you can see at the top here, we've got 0.4 and we are currently sitting somewhere below 0.3, but this is for February's readout, as you can see here. I can only pull the chart as far as February's readout. It has not yet encompassed this 0.5 signal, this 0.5 data point for March's readout. And now if I show you exactly why this is so significant, back in 1960, you can see now, zoomed in on 1960-ish and 1961, you can see the recession here shaded. And by the time we got to a 0.5% readout, as you can see here, we were already about a third to halfway through the recession. Now, if I move this and check in on the 1970s recession, you will see by the time we got to about 0.5%, by the time we got to about 0.5 right here in February, we were already well into a recession. If I slide this to 73, 74, you will see by the time we get to about 0.5%, we're already about halfway through a recession. Are you starting to notice a pattern here? It's a similar deal in 1980. By the time we jump from 0.4 to above 0.5, we're already halfway through a recession. Again, in 81, by the time we reach about 0.5%-ish, you can see we're already at least a quarter to a third of the way through a recession. It is the same deal in 1990, as you can see here, halfway through a recession by the time we hit 0.5. It's about the same here in 2001. We see the same again in 2008. And you'll notice in the world's fastest recession, that C19 plunge that occurred in March 2020, we went from 0.3 all the way to 4.0 in a single month. And by then, the recession was pretty much over. So now with all that as context, when we take a look at today, okay, again, hard right edge, currently sitting at 0.27 for February's readout, but we will be at a 0.5 for March once this thing updates to encompass March's print. So I know based on the weekend's deep dive, I presented some case, as I typically do on the weekend's deep dive, that I think we are slowly but surely heading our way into a recession. A lot of people like to push back, and that's absolutely fine, to say that they don't think a recession is coming because of Raoul Paul's idea about consistently pumping in liquidity and never allowing bear markets. And I am open to being proven wrong as always. But again, when I start to see things like this, okay, it begs the question, why do they keep lying about things like unemployment? Why do they keep lying about the data? If the data was actually okay, which according to this, it is not, in my mind, they wouldn't need to keep lying, okay? I think they keep lying because this is some kind of election year and they are trying to prop everything up. Maybe that is wildly speculative and completely false. As ever, we're going to continue to take it one day at a time. But when I take a look at things like this, okay, I mean, how do you interpret it? Let me know. Because as far as I can tell, we are heading into some kind of silent recession, a recession that they are not going to acknowledge or admit to. And if this unemployment continues to spike, then tell me a time when we have seen an unemployment spike and not ended up in a recession, particularly against a backdrop of high interest rates, with people's mortgages going up, with people's credit card debt and all the cars on finance. I don't know anyone that owns their own car anymore, okay? Everyone's financing cars. This is a wild time to be alive, right? Food, I don't need to go here. You already know what I'm going to say. So, like I said, what a wild time to be alive. This year's going to continue to get more and more wild. And believe me, we have seen nothing yet. Over in the world of Bitcoin, I was getting ready to dunk on the EU. And that is based on the silly piece of news that was circulating at the end of last week that the EU was going to ban anonymous crypto wallet payments over 3,000 euros via self-custody. You can see here, I had this prepared. Bitcoin drops to 45.5k as Euro votes to ban cold wallets in attack on decentralization. And this guy nails it, okay? This headline drops every few years and nothing ever comes of it. You can see this was back from March of 2022. And so I was getting ready to dunk on this, but this post has already been deleted, okay? It's already been deleted because it's actually not true. I had this pulled up, which originally said the EU was going to ban the payments over 3k. But by the time I reloaded it this morning, they have changed the headline to say, EU scraps proposed 1k payment limit for self-custody crypto wallets. I ran a search for EU bans crypto 3k and I couldn't find anything in the news. It seemingly all just disappeared, which is kind of weird. It's kind of weird, but it's clearly a piece of fake news, probably to try to force some panic selling into the weekend or whatever. And I did manage to find this, okay? No, the EU is not banning anonymous crypto wallets. And the facts are the facts, okay? It should really read, the EU cannot ban anonymous crypto wallets. Just as you can't ban a cash transaction from my pocket to your pocket or vice versa, you cannot stop a peer-to-peer decentralized network. Can you, if you're using hot wallets like Coinbase or something like that, can you have your crypto watermarked and KYC'd and attached to it? Yes, okay. But if you really want to know how to move Bitcoin peer-to-peer, then do a little bit of research, run your own node, and go down that rabbit hole on your own time. But again, the facts are the facts, okay? And Bitcoin continues to do Bitcoin things. Bitcoin continues to win. You cannot ban it. You cannot stop an idea because ideas are bulletproof. And for Michael Saylor, you can see Bitcoin continues to smoke every other asset class. This is the performance of Bitcoin, the S&P, Nasdaq, gold, silver, and bonds since August 10th, 2020, when MicroStrategy adopted its Bitcoin strategy. So again, Bitcoin continues to do Bitcoin things. Bitcoin continues to win. And the charts don't lie. I got some fantastic charts here from Tony the Bull. The 3-month Bitcoin parabolic SAR has been tagged. So notice last time the parabolic SAR came down here. Okay, we got the first shift to the bottom. Very good things happen to the price of Bitcoin walking forward. The same is true here. When we got the first flip to the bottom side, we saw a nice up thrust from around 10 to 65-ish K. And now at the hard right edge, okay, we've had the flip to the downside, telling us to keep an open mind about seeing better than expected outcomes in the not too distant future. We also have the 3-month RSI about to blast into the bull zone. A lot of people make the mistake with the RSI. They think as soon as it hits 70, that's overbought and thus we should be selling. But in fact, this is a momentum oscillator. In the case of Bitcoin, you can see it remains overbought for a lot longer than most people are ready for. And during those times, as always, Bitcoin does Bitcoin things. Is this time going to be different? I personally highly doubt it. Since the 3rd of December, long-term holders have sold 720k Bitcoin, whilst the short-term holders have added 1.072 million Bitcoin. Different cycle, same results. Guess what happens next? And so the blue line here, okay, is the long-term supply with the pink being the short-term holder supply. You can see when the blue turns down and the pink turns up, very good things happen to the price of Bitcoin walking forward. The same is true here, okay? When the blue turns down and the pink turns up, very good things happen to the price of Bitcoin walking forward. And now what do we have? We have the blue turning down and the pink turning up, telling me to expect very good things to happen to the price of Bitcoin walking forward. And last but not least, before we hit into some charts, okay? Every halving period, there is a bull market in which Bitcoin price pumps. Now listen carefully. These price pumps are not bubbles, but fundamental jumps, structural events, phase changes. And you can see this in the realized price, which flattens until the next jump. Halvings are critically important Bitcoin events. The stock to flow model tries to model these jumps as elegantly as possible with only one variable and linear function. So you can see here, okay, and here, we are ready for the pump. Is this time going to be different? Again, I highly doubt it. And so heading into the charts, Dixie right at resistance. If it can break out, okay, that is something to take note of. And if it can reject, then perhaps we have yet to find our 3-year cycle low. For now, though, on a balance of probabilities, it's hard for me to say this doesn't look pretty bullish, right? This looks like it wants higher. So we'll see. The Dixie can indeed run for a while, along with risk and other assets. But we're going to find out, right? We're going to find out soon enough. We've also got gold at the moment holding above its cycle low. So again, we're going to need to keep an eye on this. All the while we're above the cycle low, we can expect higher prices in line with my yellow squiggle. As soon as we take out the cycle low from Monday the 18th, then again, it tells us to keep an open mind about seeing lower prices. So I'm going to be watching that like a hawk today. Last thing I wanted to cover is Bitcoin. Now, I've yet to add a position. Of course, if I had, I would have notified the members. But for now, we apparently are holding the support. We apparently are holding above the cycle low. Okay, and all we really need is a push off here, a strong push off, a nice big green candle, something like this, whether it's today, tomorrow, the next day, some kind of up thrust here to confirm that that indeed is a cycle low, that we're not going to have one final flush before we go. And I will have seen enough and be happy with the situation to add a position here with a stop below the cycle low, targeting way higher up. I think somewhere in the 80 to 90k region before we get our first pullback. So let's find out. There's always the possibility, of course, as I've been saying a few times, that we're going to get some kind of consolidation cycle, meaning that we have already found the cycle low, and now what we're going to do is kind of chop around and trade sideways for another 2-ish months, and then out of this, we could be looking to get long somewhere in this neighborhood before that pump higher. We're going to take it one day at a time as always. We're going to find out. But for now, these are the things we're looking at. Okay, we want gold to hold its cycle low. We want Bitcoin to confirm its cycle low, and hopefully we can get that dollar to reject off of resistance. And then I think all of the stars will be aligned to continue this camel run. I'm your boy Camel. I hope you enjoyed today's episode. Let me know what you think about the recession data or that jobs data. And until next time, take care from me. All the best. Cheers. Bye.